Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Listen, let's just get him right in. I'm here with my guy, Josh, and we call ourselves having dinner and with the wives and trying to relax, but I said I better get a video up today. Market came back. I expected it to come back up a little bit after yesterday's reaction. You know, to me, Josh, the new Fed, well, historically, and you and I have had these conversations leading up to, and I had this one with Terry. I said, generally, when there's a change in the arms of Fed, the market doesn't react good.
Yep.
Okay, and that's exactly what happened. I mentioned it a time or two here that it's just not good. Plus, if you look at where we are with midterms, we're due for a pullback. All of this stuff just lines up. But having said that, I thought that the reaction was too much yesterday. As a matter of fact, and I'm going to let you talk, I don't think the Fed sounded that hawkish, but everybody else thought he did. You know, he kept repeating the same things. I get it. I don't think he said anything way out of bounds.
No.
I don't think he said anything that was going to just really spook the market. As a matter of fact, he said a couple of positive things.
Well, one of the things, Larry, that I thought was a little bit unnerving was him not giving the further out guidance. And the way I interpreted that is that he wants the ability to react to the data. And what that means is that if all out of nowhere he wants to raise the rate, he's going to say, well, I told you I was going to be more reactive to the live data, and he doesn't want to put himself in a position where the market is surprised by all of a sudden a random rate hike. So it wasn't to me that he sounded particularly hawkish as much as that was the thing that I took that concerned me, that made me think, is he priming us and preparing us for the unexpected? And that's how I kind of took it.
I didn't see it that way at all, actually. Well, let's circle this date in a day in history. Josh and I really didn't see things the same way. Actually, on 99% of the things that we don't even discuss, he'll look at my video, I'll look at his video, and I'm like, yep, we're right there. I think forward guidance from all of the previous Feds was a big mistake, because if the data doesn't bag up what you think going forward, we need that data. We need month-over-month, year-over-year data. We need those inflation gauges. We need CPI and PPI. So how could you even give forward guidance unless the data's here? We know that inflation is high, right? And we know that the Fed, unfortunately, and people don't believe and receive this, but when inflation is high, the Fed's job is to slow the economy.
I think the forward guidance idea is this, that he's basically able to give us an if-then. So the forward guidance concept is, he says, okay, well, if we get through June,
right,
and we don't tick down from X percentage by at least 0.25%, then it would justify this reaction. So it's more that he is telling us that what he's going to do, he wants to leave it entirely his decision in the moment, and he's not going to give us any if-thens. Larry, you know, on my show, I will give people a level, and I'll say, if it hits this level and doesn't bounce, then it's going lower. He refuses to give us the if-thens, and I believe that was the softening blow to prepare us for the unexpected. What's the unexpected but a rate hike? Did you see, not to get political, but did you see Trump's reaction?
No, I'm dying to hear it.
It was entertaining. He kind of acted like a sad dog. He was like, well, you got to let the Fed do what the Fed's going to do. I like this guy, but these Feds, they need to understand that these powerful, strong economies need the fuel, and so
and you and I know he cannot lower interest rates right now.
No.
It would just destroy the market.
Yeah, I do think that we're going to have a softening job market ahead of us, and one of the biggest reasons being given for layoffs right now is AI. And so we have other reasons, as well as the fact rising healthcare, Larry.
Yep.
So you and I have talked about that from year to year. You say, oh, we're paying these many more thousands of dollars. Well, the corporations, they don't want to pay it, right?
No.
And so they're going to take more carefully and cautiously keeping people and hiring them.
Yep.
And that's going to soften the job market. And then that would justify him not raising rates. And it would potentially justify him lowering rates.
Speaking of robots, at the end of this, we just left dinner. I'm going to play for you one of the funniest videos about robots coming to take your jobs. Well, it's funny to me.
Yeah,
they was literally trying to take our food, but I'm gonna.
Yeah, Larry said, let's film this, and it turned out pretty entertaining.
It did.
Unplanned, unscripted.
I'm just gonna play it.
Can I comment on the market? I
Yes.
wanted to just say that I agree with you that as far as the market's reaction on Wednesday, it seemed like near the end of the day, it processed what the Fed said, it pulled back.
Yep.
And I said in my show that if we end above 745, that's going to lock us into 100% neutral to bullish, okay? So at the moment, we got this big event and nothing big has happened. So here's my take on that, Larry. The market wants, what justifies the rally we're in is how strong earnings has been.
Yes.
And the market is going to probably drift down, and it's not going to have a reason to keep going higher.
Right.
It's going to stay range bound until earnings, and then we're going to get a couple important companies. And if there's any cracks, this Q2 earnings, that we get some of it in late June and most of it in July. If there are any cracks, that's when the real problem is going to arise.
So now, it's interesting. I had Terry Ijeoma on the show.
Yes, I enjoyed that.
And thank you. How did I do as a host?
Excellent. Excellent material.
Thank you. But anyway, listen, it's a good point because that's the point that she brought up about earnings, and I agree. The Fed is not the threat anymore.
Yes, you're 100% right about that.
So remember, these things go in rotation. Think about this. Before this war, right, it was Liberation Day. So it was all about the tariffs.
Yep.
It was the number one threat against the market, right? Remember, we take all of the pieces of the puzzle and put it together, all right? Forensics trading. Then what trumped that was the CapEx spend, remember? Before the war, the market was tanking because, we spent too much on AI. Remember that? People have short-term memories. I remember every key data point, right? And then when that was over, then the war, right? Now,
which the market never really priced in.
It never did. So now
it overlooked it.
Exactly. And so now that we have the new Fed out of the way, and now that we know that Fed is going to do what he has to do, it's not going to be a call that just says lower interest rates. That's not going to happen. No. He's going to do what he pretty much told you guys, I'm going to do what I got to do. So now we're back to normal things like earnings, right? And I agree with you. If earnings are soft to weak leading into this summer, I do believe we'll have some sideways chop and a slow drift down.
Can I give you a trigger?
Okay. Right after I get my thought out. I just want to, because I'm old, right? You're one member that you know what he's going to say, right?
Stop interrupting.
Right. But this time he's going to say Josh. But anyway, stop interrupting Larry. But anyway, he's got a fan. Anyway, we'll talk about that later. But I think that the market will go sideways. I think that it will slowly do a meltdown over the summer. So in the chop, lower lows, okay? Lower highs, lower lows. All the while, I think we'll step down if, here's the if and. If earnings are soft to bad or to negative, okay? So that's the if. I do believe that there'll be some buying opportunities, but at the end of that, and I want you to give me your unbiased opinion of what you think, I do believe that we will close upwards of 78. I do believe that the market will close higher by the end of the year.
Okay, so I like all that. I think I was going to mention that to me the strongest catalyst that's going to be a precursor to big tech earnings is going to be Micron this next, I think it's Wednesday, but check Wednesday or Thursday, but I think it's Wednesday. And I think that right now, Micron has been one of the leaders in the AI story. And it's kind of, I think if they have trouble of any kind, that could be a big red day if the market doesn't like what they see there. So yeah, after that, as far as earnings goes, as far as the summer goes, we've been waiting on this pullback that we haven't had much of. Right. And we've got to book it sometime in the middle of the summer. I think Bitcoin's waiting to finish its final leg down under 60.
Yep.
I don't know how low it'll go. I don't know all the macro that we'll face. We went higher than a lot of us thought. We could go lower than a lot of us think. The market tends to be unpredictable. But I think that's the biggest mover next week.
I'm with you. Did you see the close of MU?
No, I didn't get a chance to see that.
It's insane.
Dripping?
It's high.
Yeah.
I mean, it's just, I'm like, it's become Nvidia.
Yeah.
Price to perfection.
Sure. It has become Nvidia.
So I have a friend, I'm going to send this to her, Pastor Kimberly Ray. And, I told her, she's up massively. And I said, it's okay to take at least your initial investment or a quarter of it and just sell. Don't try to time it. Just take a little haircut. And then on a few more of the shares, say 25%, set a trailing stop loss.
Yep.
Because you don't wait for the fall. You take green while it's green.
Sell into strength.
Exactly. Sell into strength.
Can I throw in there? So
Please do.
I had said on my show that if we could close Micron above 1080, no, it was 1080 today, that by Monday we'd be at 1200. Monday or Tuesday. Yeah. So I'll have to look at the price post-market.
Right.
But I think that it's going to be shocking to people.
Right.
We're going to kind of hit that level. And I think, there is a chance for this to go to 1300. But I think that the final stage of this move, as Larry said, price to perfection, is going to be found between 12 and 1250. And I think from there, we're going to fade off of that successful run. This thing was $80
Insane.
12 months ago, and now
Insane.
it's $1,200. It's an incredible move.
Yeah, and we have to learn, we have to go back to the old way of taking profits, which is not, most people don't know it anymore. They don't know about the, up 25%, up 30.
But can I play the bull's advocate?
Okay.
If you don't want to take any profit, you'll just see a pullback maybe to 880, something like that.
Right.
And then I think this is going to consolidate and run up. It's going to have a stock split. It's going to come back down to, $100 like Nvidia. This is Nvidia right now in 2026. So I don't think that if you choose not to sell, that somehow all of your profits are going to get erased. You're gonna see some pullback, but it will have another day. We saw that with Nvidia. This is like year one for Nvidia in 2023. It ran all the way up to like 350 to 450, and people were like, "Oh my goodness!" Remember, it went up above 1,000. Okay, then it went up to what would be constituted 2,000. Yep, 2,500.
You know what had moves
when you do the price analysis from before. You follow?
Oh yeah. You know what else did that? Palantir. Palantir ran up to 200. I took profits, and then I kept some, and then I sold it at like 170, 160 something. And I told my family, I told you guys here, I was selling some. What is it, down to 128?
128. Yeah.
126.
126.
At some time, it's okay to buy and hold and never sell. That's fine. But at some point, smart investors know, I don't care what stock it is, it's okay to take a haircut. And what I do with the money that I sell is I earmark it to get back in, right?
And I know you got out
exactly
within $1 of the top, recent top.
Exactly.
And now you are sitting back. Yep. You can buy it any time, and you've improved your cost per
my
share.
cost per share.
By about, what would that be, $35?
Exactly.
Not a bad move.
So that's what I was saying to my dear sister. I've been picking on her for the last 3 videos, that it's okay to hold it. And when it gets real top heavy, take a little haircut, save that money, and buy back into the exact same stock if you want it. So you're actually lowering your dollar cost average. And there's been, just think about it if you had it at 80, right? Which I know some people that had it, and it went up to $1,200. Literally, you could take your initial investment out,
let your house money run,
and never lose.
Yeah.
You will never lose.
You'll never lose.
Yeah. So
hey, Larry, can you do me a favor?
Yep.
You know, you got to tell some people who I am.
Oh, guys, this is Stocks.
You know,
I didn't.
Both of us assume that everybody knows the other.
It's true.
But I'm out with this guy, and he's like a celebrity. They say, "Oh, stock up with Larry Jones," and I'm looking at him smiling like they're going to say, "And stocks with Josh." Nope, they don't know me. I am Stocks with Josh.
Listen, this is, believe it or not, this is 30 years deep friendship. This is Stocks with Josh. He has a page on YouTube, Stocks with Josh. I want you guys to pay him a visit, hit that like and that subscribe, and he's going to pour into you. I will also say this, and not just because we're 30 years deep, we've been trading together since 2007.
Yep.
What I will tell you is, hands down, he is one of the best. He is the best technical analyst I know, period, that I've seen on TV, YouTube, anywhere.
Thank you, Larry. And I'd like to just share something about you. Larry always finds the hottest stocks, you know, in the fastest moving cars. And, and he's proven this time and time again on YouTube. And then when he got those quantum stocks and he got them cheap, and he ran them, some of them up 3,000%.
Yeah, well, one, we cashed, it went up 3,000. We caught 1,700%.
Yeah, nobody's doing that. And I'm always looking to see what he gets into next. What are we getting into next, Larry?
I'll let you know.
All right. Hit that like and subscribe.
Yes.
To catch what Larry's getting into next.
I know this one is long, but I'm just going to let it roll because I won't be making a video tomorrow. I'm literally going to take a day off. But at the end of this, I'm going to play something that I just handed him the phone, and I'm going to show you that these robots they're taking more than our jobs, okay? Do me a favor, click the link below. If you're on your cell phone, hit where it says more under there, and then there's a drop down. It says description. Come join us in Money Moves. As we say as a family, come get this money. We're going to teach you how to do options and make money. And we're going to show you our portfolios and help you to build a portfolio, even if you don't want to know about options. But check out this video. They're coming for our jobs and more. This is where our jobs are going. Robots. Yep. How are you today? So we're having some Peruvian food. No, don't leave with my food.
Taking our food away there. Grab it. Grab that food, brother. Oh. Our food's gone, man.
It took our food. Come back in with my food.
Well, there's some bugs and kinks to get worked out.
See, not only are the robots taking our jobs, they're taking our food. The robots is taking our food.
And they also come with one of these.
Thank you so much.